bringing you a strategy of the day update here for November 23rd, 2021. We are into Thanksgiving holiday, and we got a holiday week ahead of us. Tomorrow will mark the final day. Well, I take that back. We actually have a half day of trading on Friday for the grain markets, but check those calendars, everyone. We've got a wicked week ahead of us in terms of what markets are trading and when they're trading. For those that aren't aware, our ag markets will be closing tomorrow at the regular bell. We'll have pre-open. In other words, you can adjust orders and do all of that good stuff anytime. I think about that half hour after the bell, and all the way through Wednesday, actually through Friday morning. So tomorrow after the close, Wednesday after the close at 20 p.m., all the grains and ags will be shut down. They'll be closed through the holiday, and we will reopen on the morning bell on Friday at 8:30 a.m. Central. Trade think for 4 hours until 12:30. Don't quote me on those, but do check your calendars. Fairly certain that's what the schedule looks like this week. With that being said, that always makes for really strange price action into holidays. You can have low liquidity environments, you can have low volume environments, you can have volatile markets, you can have, right about the time that we're sitting down for Thanksgiving dinner, usually there's some kind of movement. Crude oil has always been a mover around this time of year, and the fact that we are banking on most of the world, releasing reserves right now is a big reason. I'm kind of starting there. Let's have a quick conversation about crude before we get into anything else. Crude's an interesting beast right now. We've got some market, I hate to say it, but manipulation attempts here. It looks like by many of the Western world powers trying to get together to do something about these crazy gas prices. But unfortunately, they're doing all the wrong things. No amount of liquidating reserves into the open market right now is going to change the global dynamic. There's just not enough oil. Most countries only have a couple months worth there. So by the fact that we go through news cycles on a weekly and monthly basis for crude, news like this has probably already been priced in. Something we're going to talk about here today, why we traded up $3.50 after the SPR news was kind of more confirmed today. And all of a sudden, how did the market get so bullish when represents a bunch of countries systematically selling oil? Well, we've been talking about this for the last few weeks. This is no surprise. If you've been certainly engaged with me at any capacity, or I guess just trying to pay attention to the energy markets and news at all, releasing reserves, and particularly, it's not just a Democrat or Republican president type of thing, because Trump released reserves as well. But it was, it's a tool that we expect presidents to use, and when the price of oil is, quite frankly, over $80 a barrel, is usually when you see it. So with all that being said, remember, trading futures involves risk and is not suitable for all investors, and everything I talk about here today is just my own opinion and not a direct trade recommendation. But crude oil, it's in my opinion that I think we really priced in the downside, or this $10 drop in crude. Very typical and systematic pullback. Crude loves $10 drops, pullbacks. If we can pull up a daily chart here, you can see almost the entire way up, it's solid $10 drops. 43 down to 33, 67 down to 57, 77 down a little further there, down to 61. 84 down to 74. $10 pullbacks in a trend higher for crude is just another monthly cycle. But right now we're into the news time frame where, we are certainly going to a time of the year where we expect at least petroleum demands to be on the downside. This is the time of year where we expect that natural gas demand to be there, and of course energy prices tend to move hand in hand when they go together. But the point here is that the market probably already priced in the systematic release of crude stockpiles, which would drop that price of crude. And now we have the market, particularly a futures market, which again, forward thinking, which is what futures are. They're trying to price out where the futures will be in January. Well, guess what? It's November 23rd. We've got a month and a half to go, a month and a quarter to go before this contract really becomes deliverable. And that crude that it represents is actually, making its way into the market. So if we're talking about releasing reserves today, that's going to be done within a few days over this next monthly cycle. After a month, the Western world is going to have to start repurchasing crude. and have to start buying back that stockpile to rebuild national stockpiles, because no country, well, we, the United States, are one that has plentiful reserves that we can kind of get away with not having a strategic oil reserve. Our strategic oil reserve is more, obviously, it's supposed to be the backup for our military in case we needed extra, oil and petroleum for a wartime effort. But it obviously gets used for economic reasons to try to manage energy prices. Not, in my opinion, the right thing to do with it, because like we see here in the chart today, crude is up $3.50, and I'm willing to bet that we'll probably go back to that $85 high before we are done going through those SPR releases. Again, if it takes the next month to go out, I would put a bet on that we'll be going back to highs here. Not actually taking this trade or anything. I am looking for an entry to a long side on crude. It'll probably be via call spread or some calls, or maybe buying a little dip in the futures here. But I wouldn't rush in right here, right now. However, I do think this could be a completed correction. Technically on a chart, pretty choppy wave down. We've got that open gap up around 80. That is on the continuous chart though. So. Grain of salt, but pulled right back into prior highs, old support, old resistance, now support. It's a 50% retracement from our 61 lows to the 84 highs. It's channel support, and it's a $10 pullback in crude. All makings for a potential low in the near term. But the strategic oil reserves being released, I felt like it was necessary to talk about here, at least give it a minute at the start of our presentation, that we could be seeing the market start to think about pricing that in here going into the future. And if that's going to be the case, we need to be aware that that's crude prices might not be representing that news cycle at all. We could be thinking about something else. So let's get into the grains. Let's start with the January soybeans here. Kind of going to be more of a corn and soybean day. I have a few comments on wheat, but this will be a pretty quick video. Just want to get everybody updated because, again, tomorrow at, not Thursday because of Thanksgiving, but tomorrow at 2 p.m. Tomorrow at 2 p.m. Central, we'll be doing our strategy of the week for the week. So do sign up in the links in the comment section or in the info section of this email or this video to get on that email list, to get that email every week. And of course, an email of the copy of it when it after the Zoom meeting is completed. With that being said, January soybeans here, trendline resistance against the highs has been the motive, or has been the act that we are playing out here. We've been breaking above that trendline resistance that we've been talking about since June. Finally above it here, above the 55-day moving average. Both those levels here really testing and holding a support to keep us above 1260 here the last couple days. Today was inside price action. I mean, don't ignore the little bit of green we have on the new candle, but this was an inside day compared to our prior day. We almost broke out of prior high, so very key level to get back above 1280 there because we have now 4 days running that we've been below it, and the market is testing that ceiling. If we can break through that ceiling, there's not much in the way, in my opinion. That'll take us right back up to 1299. Excuse me, $13. Which is where the 200-day moving average is, and I think we'd be trying to make a move back above that level here if the market can get going. We are overbought in that RSI, but markets will stay overbought far longer than those shorts can stay liquid. So I'm just gonna let that be for now. And kind of ignore it. We weren't ignoring it, and I'll bring that chart back up before. We weren't ignoring it back here, into the end of October. We were worried about it, but then we had that flush out that kind of reset things. Yeah, not saying it can't get that, but I think we'll actually press. I think we're going to get a burst above $13 before we have that pullback. We'll see what happens. But don't be surprised. We could move down towards, 1244. That's the 18-day moving average. So there's nothing that says this market might not head down to that 55-day, 18-day moving average, before higher. This is all kind of sideways pennant-like structure. And by all means, I'm cautiously optimistic here. I'm bullish with everybody else, I hope, at this point. Actually, I shouldn't say that. The market is that's the fun thing about a market, right? There's always two sides. So, all right, let's look at the 4 hour. So I'm a little out of it today. Had some dental emergency. Was no fun. Go in for a cleaning, walk out with a tooth extraction, but that's okay. I'm more just tired than anything. It doesn't hurt, but thank you for asking. Okay. Um, Again, that trend line resistance that we're breaking through correlated or was alongside a breakout to new highs for the month. In the short term, we're in this pennant structure, and I kind of want to skip right down to the 15-minute chart here for the beans because I see maybe a little triangle A, B, C, and if we get a D wave down, D wave can be as shallow as 1270, but it could go as deep as 1264. That D or A, B, C, D up, E wave down would terminate the triangle. The moral of the story is we're going to want to see it stay above yesterday's low. If you're a buyer on the dip, that's kind of a level you use like as the stop in a triangle or a wedge formation. You might use the more extreme low 2 down around 1257. But point being is that if this corrective pennant structure is going to give way, either this push up that we see right now will be the burst or one more. If we get anything beyond that, it will become too protracted, too long, and we might see, unfortunately, the same type of breakdown we saw after we had pretty much sideways pennant-like structure and nothing burger of a market for 2 weeks here back in early November. Excuse me. So I'm not anticipating that breakdown at this point. We already went down. We capitulated. We came back up. I do think there could be a pullback towards 1235 to test that old prior high as support now. And of course, the 1235 50% retracement, which is just a 50% measure move from 1181 up to 1289. Can't rule that out yet. But we do have some smaller trend lines, a little bit of a wedge, a flag, and this extended long. This extension is formed from a breakout that we had from last week. You had a 50% held, 50% held. Then that one broke out of its targets. Highs to highs extension from this 1228 anchor to the 1249 highs, 1239 traded, went up towards 1254 and beyond. Same anchor, new high, finally got the pullback and has been drawing and has been creating that kind of that sideways structure. Now, if you're really sorry about this yawning here, folks, if you're an Elliott waver, you might see this as a 5-wave structure with this being the 4th wave in a triangle, which means, like I was talking about, I think we'll get one more push above $13 before we get a little bit of a deeper correction or some more volatility. Just my opinion. We'll see what happens. Again, that push above $13 may not look back. We saw last year from this time into January and the new year, we saw a move that gave us almost no pullbacks until it was almost too late. So, you know, I wanted to at least get everybody up to speed that we'll see what happens. that I like the price action the last couple days. The fact that we haven't fallen apart yet is pretty bullish, and you know, again, above 1280 here just continues to confirm that I think the beans need to test that $13 figure. We haven't really seen exports this week. Not totally shocking, given that China knows we're going on holiday, and you know, they like to play games with the market, and this might be one of them that we're seeing. Okay, December corn. So again, tomorrow we'll take a look at some opportunities there, and maybe where some of the things from last week we're looking. We actually, since you know last week's last Thursday, excuse me, we haven't had much to talk about. We're actually kind of back to the same places we were really at after that. So we'll see what happens. But continue to watch 1260. Anything while we're above it, I think our beans might be able to continue and see some follow through here to the upside. Man, I'm just out of it today. Let's check out December corn here because this is a market where we've been waiting a little bit longer for a breakout and a very similar type of pennant structure forming here. But December corn and actually the breakout here above 580, this could get really this move higher. I think the next move higher is going to be 20 cents towards $6. So we'll see if that happens here into the end of the week. But December corn, I mean, just a beautifully technical kind of cup and handle kind of structure here. Basically a bullish rounding out bottom and continuation higher that we're expecting here. Big old range that we had been in. We broke above trendline resistance. We even came back to test that as support here, the 18-day moving average. We're getting that bullish crossover, the continuation of bullish price action. The 55-day moving average and the 100-day moving average are about to cross over. So that is the big news of the week for technicals on corn. We're about to get a little bit of a golden cross here and that 55 and 100-day moving average. The 18-day moving average is acting as support as it typically does in a nice trend move. And we got trend line resistance in the very short term. Second day of row of higher highs and higher lows for corn. I'd say a trend up has already begun, and we're looking for that breakout above 580 here in the near term. And I guess while I get charts up, and because all I really have to say about wheat here is, this daily chart I'm getting ahead of myself. So let's finish corn. 4-hour chart here for December corn trend line support is still holding through the lows. Lots of 50% lines that we could. I'll get rid of these nice little alerts. I don't need them up there yet. December corn. 3 waves back off of this high could take you down towards 556 to 564. I really can't rule that area out as support if we get down there. I'd want to see corn stay above 560 because if it doesn't, this entire range that we've been in from 586 down to 464, we could trade all the way down there again. But while we have this trend line support, while we're holding above our congestion zones in the middle of the range that we'd been in and all of these trend lines and just really looking like a market that is banging against that ceiling. If these ceilings all break, together, corn, beans, respectively, wheat's already way through whatever ceiling it might have had at any point in time. But if wheat and corn, or corn and beans, can make that move through the ceilings that we see right now, 580 for corn, 1280 for beans at this time, 1288, 90, 80, 90. We really have plenty of room to the upside, right? So again, bullish moving averages, trend lines, everything looking good there. Let's take a look at that 4-hour chart for December corn. Full 50% retracement, 550, 565 if we get down there. In the near term, however, from this 567 low to the high after 578, we held a 50% pullback. You see that 573 area? Pulled back into it, and now that's traded up to its 581 support. So the market is trying to get its legs to break out here, and if it does, the full 50% that we had already kind of held or traded in this pullback, which I'm calling from the November or October low down around 508 to the high here, kind of almost traded down there around 547, 550. The swing up from there should take you towards $6 to 606. So you see the very interesting inflection zone of multiple potential targets or profit areas. Those aren't areas I would look to sell the market to get short. It's definitely an area, though, if I was long, hey, good idea to take profits. There's profitability. You might be joining in on other traders profit taking too, and you all could be the reason the market stops moving from there, pulls back a little bit, and then finds the new round of buyers that ultimately takes us to new highs or beyond that level if we're trending higher. But this market does look like we did everything we could to break below $5. Soybeans, you could say the same thing about 12 here going into harvest. So I think the corn definitively has said, I want to be above $5 here going into our next marketing year. That is a fair price. And I think with the rising input costs and everything else we've had arguments for with corn, that's certainly the case. Now, export markets for both corn and beans, we're a little bit behind here. Phase 1 trade deals have not been hit yet, or the basket hasn't been filled up there this year. And I want to remind everybody that rising prices for the commodities, particularly our row crops, and any agriculture product, but anything that gets clumped into that phase 1 trade deal that is still ongoing, and Biden in his talks with Xi, and for all intents and purposes, we are all anticipating China still hitting and meeting, reiterated that those targets were expected to be hit by China. That purchasing, and I tweeted about this earlier today, is not based off of volume or quantity of anything bought. China's got to buy a certain dollar amount. So higher prices here, $6, $6.20 corn, $13, $14, $15 beans, that helps China get to that phase 1 deal quicker. And a big reason we saw purchasing kind of tailor off towards the end as prices go higher. That's price rationing of demand. But it also was because China needed to buy less and less to hit the phase one trade goal. Now, that's assuming that that is the only need they're going to put in this market. There's clearly a need for China to stockpile food grain, and they've been doing so for the last 10 years in building that stockpile. And we're coming to this point geopolitically where it almost feels like it's a boiling point. The world is seemingly preparing for something, isn't it? Everything's changing, right? We are a distinctively different commodity space than we were 5 years ago. And geopolitically, I don't think there has been this much turmoil, this much confusion, this much chaos, flat out chaos globally. And it's crazy because it's not war chaos, right? It's not like it's all self-induced political chaos that, quite frankly, I don't know. I'm at the point where I think everybody just kind of needs to I'll get off my soapbox here on this, but I feel like we need to do something about the politicians for a change here. And accountability has just gone out the window. So we'll see what happens, but it does seem like China will hold to those trade targets. It does seem like they're going to need to do some additional purchasing to catch up with it, and that's a big reason why going into the end of this year and into next year, these are very interesting markets because if more aggregate demand comes in, we had a demand-driven market last year where we saw prices, we all know what they did. And so far this year, with the exception of like a hard-headed push from a U.S. trade delegates and an administration that it was much more aggressive on China and kind of pushing their buttons to get this done, the current administration is a little bit more laissez-faire and hands-off, but I think the anticipation is that the deal will still get struck because there's no reason China doesn't need the product they're buying. And that's the moral of the story, is the trade deal is kind of I don't know. I hate the fact that we even have it because all it does is it makes the trade worry that we're not going to hit it. All right, enough of all that. But corn, sideways price action. I know there's not much to really sink our teeth into. Get rid of actually a lot of this noise right now. But I wanted to point out these tight pennants that we're getting. I think we're on the cusp of a breakout, and kind of today is more setting up for tomorrow's strategy of the week, where we'll look at. I don't know if there'll be necessarily great trades we'll want to take and talk about tomorrow, but I think there'll be setups that we won't want to miss if we are, if we're making a plan from here into the new year, right? Because this is a holiday week. I wouldn't expect many people to be interested or want to put on trades. And let's face it, after tomorrow's strategy of the week, there's going to be nothing we can do until Friday morning anyway. And then, short trade on Friday means we're going to limit down the last holiday where we closed and reopened like this. So that was July 4th. So let's just not get overzealous with the market on a holiday week, okay? All right, so December corn, expecting it to head higher. I think energy prices will continue to float it as well. And if beans and the corn can break out of those glass ceilings we have here at 1280 and 580 respectively, onwards and upwards we go. And speaking of the market that has broken that glass ceiling, wheat. Love to buy a dip in wheat if it would give you one, right? I was anticipating, we were talking about last week, hopefully a dip down to like $8 to really test it. Didn't even want it, just pushed to new highs. And we got a full-on breakout here for wheat going on. So, all right, big question. Where do we look for the upside on wheat? Now, I would not be a seller. I think selling wheat here, I actually had this exact conversation with a client today. We both agreed that wheat's probably overpriced here, due for a correction. Hey, that could make for a quick, easy buck maybe in the market, right? That's where we press the timeout button. And we say, all right, is this a boredom trade? Is this a trade just because we don't see anything else we'd want to necessarily get in? But hey, there might be the opportunity to make money here, and there's at least a chance of it. Yes, this is what we refer to as a boredom trade. We're picking a top. We're picking a bottom. There is no technical indicator at a top or a bottom of the market that tells you it's a top or bottom of the market. Every indicator and everything you could use to pick that top at the moment, all those things happen after the fact. They're all there to quantify and qualify a top once it is in. So RSI, momentum indicators, none of them with any high degree of success I have ever seen anybody use to pick the top while we're still forming it. I have seen many a trader do very well, some traders. I've seen traders do very well waiting for the top to be in until certain indicators have all lined up, giving a confirmation of a top together. And okay, maybe you missed the first 5 to 10% of a move, but you catch, 95 to 90% of it if you're patient enough. All right, big thing about wheat I really wanted to talk about though was that we kind of have a breakout happening of this consolidative range. Well, there's still good technical means, and today that looking at a wheat chart is kind of a okay. Well, how do we gauge how high wheat can go? Let's just take the measurement of the 514 low through the recent range highs and extend that from the big range low here around 620. So basically it's a 514 measurement to the 770. That measurement here, extend it from our lows of the range, that has an upside target of 875 here. That's just equal legs up, very technical type of level that we might expect the market to go to. Full 50% level from 514 up to that high as well, 642. Would you look at that? Traded into that 50 to 61.8 area and went all the way on up to its 830 target. We're now breaking through that target. This secondary, the negative 61.8, is at 929. So if I was to, if you were to say, okay, Dan, and we're going to watch how this plays out over this next week. How are we going to continue higher? If we continue higher, yada, yada. Well, maybe I think, we might get a little bit of a move up. Turn off that right extension. Get a little bit of a move up, then maybe a little bit of a move back down, then back up. Okay. Tell you what, I'll release an image with it drawn on there. But the idea is I think we'll go up into this 100% line, maybe pull back a little bit, and then push back up into that up into that 929 whatever if we're going to continue higher, because we probably won't just go in a straight line, right? We're going to get some kind of pullbacks. Market's never head in a straight line, but this parabolic move in wheat, not one I would pick a top on. I still am interested in buying the dips on it. I just like the opportunity. I think we're closer to a top in wheat than we are to corn and beans. Let's put it that way. So I think the opportunity for more of the swing trade is there in corn and beans, but you can't deny wheat is a very clearly trending market higher and certainly is broken out above key technical resistance. Now, this 770 to 780 area that we finally broke out of, we tested it all as support just once here. This is your first look back, right? We broke out, we looked back, checked our sixth, we crazy Ivan, if you want to call it that, and then continued on. I call it a kiss your mother. There's lots of test back, look backs. There's lots of names for this type of pullback. But the idea is it's broken support, or resistance tested as support. You can flip it around and use the same direction for the downside. But the moral of the story is that the market is trending higher, and any kind of pullback to retest that level would likely find support on a first test, and whether or not it goes through, we'll see. So with all that being said, everybody, do join me tomorrow for the Strategy of the Week update here at 2 p.m. I might do another Strategy of the Day in the morning, depending on how the markets have progressed from where we got on, or, what we're looking at here. Live cattle's one I would love to talk about tomorrow after the bell too, though. Breakout is occurring. I do think live cattle, though, are a little overbought in the near term and are going to be due for a pullback. But I think that pullback needs to be bought at this time. So with all that being said, look for December corn to stay above the lows of yesterday, certainly above the 570 area at this time for its continuation towards $6. And that breakout of 580 is going to be very key here in the near term. January soybeans, creating that pennant-like structure, found that ceiling at 1280 right now. A breakout of that area is very similar to that 580 area for corn. Probably see it continue higher towards $13 and squeeze through. I don't see why it would stop there. There's too many stops, too many people who would think $13 would cap it, and we probably will go through it. And again, if we head lower, 1235 is not out of the question. 1240 is not out of the question. It's just the way the market's kind of shaping up and looking in the near term. We might have a pennant in 3 days with the inability of the market to sell off market eventually goes up usually. All right, and then last but not least here, meal. I think there's a couple supportive areas here. The 365 to 360 area for Dees meal. Um, Definitely 345, very interesting, full 50% if it gets down there. There's also trendline support, but I'm expecting continuation higher while we're above 360 for the meal. Upside targets, look for 390 in the near term. I talked about this level here already on Twitter. Equal legs down, 100% down from off of our 382 high to our 368 low. Extend that from this bounce from 377. We're right down into that 100 to 123.6%. Extension area, which correlates perfectly with our extended long, the highs to highs breakout long that we saw. And again, while we're above 360 here, I am anticipating stuff towards 394 bucks. We'll see what happens. So that's it for today, everybody. Pretty good setups or pretty good levels to watch there, and we'll see what happens. So with all that being said, thank you for joining me here for my strategy of the day. Sorry it wasn't as informative maybe with some ideas and setups, but really saw today as a primer for going into tomorrow. We've got some technicals that we're watching for breakouts. If those happen, there'll be a lot more, some other trades to discuss. And of course, we will continue to look at some of the trades from last week and how they're developing. So feel free, give me a call, 312-277-0110. Find me on Twitter and Facebook. Shoot me an email, dhussey@zaner.com. Thanks for joining me, everybody. Enjoy the videos. Enjoy the content. Leave your likes and your comments in the section below. And feel free to sign up for our Zaner daily newsletter and get our entire team's commentary of current market price action. Or remember to sign up for that Strategy of the Week webinar usually Thursday at 2 p.m., where I walk through actionable trading strategies covering all the markets we talked about today and maybe even some more. So have a great day, everybody. Happy holidays and a happy Thanksgiving to all those that will be celebrating. And with all that being said, I'll be back with you as price action develops. Take care, everyone.